Are you running your entire business out of a spreadsheet? And the little prayer that the formulas still add up. If that's you, don't feel bad. You are in a good company. A lot of smart people, capable business owners, start exactly there. But here's the question I want to answer today. Can you use Excel instead of real bookkeeping? And is that actually enough? So let's get into it. I'm going to start by being completely straight with you, because that's the only way I know how to do this. Yes, you are allowed to use Excel. The IRS does not require you to use any specific software. In fact, the law says you can choose almost any record-keeping system you want, as long as it clearly shows your income and your expenses. Paper, spreadsheets, software, the rules are the same. So if you come here worried that a spreadsheet is against the rule, relax, it's not. But allowed and enough are two very different words. And the gap between them, that gap has a price tag. Let me show you. Think about it this way. You're allowed to do your own dental work. There is no law stopping you, but would you? A spreadsheet is a tool. Bookkeeping is a system. And those are not the same thing. Excel does exactly what you tell it to do, nothing more. It doesn't know if you typed a number wrong. It doesn't catch a payment you forgot to record. It doesn't tell you when your bank balance and your books doesn't match. It will happily add up the wrong numbers all day long and give you a beautiful, confident total. Real bookkeeping isn't just writing down numbers. It's a system with checks built in, so the numbers you are making decisions on are actually true. And when those numbers feed your tax return, the difference between close enough and correct can cost you thousands. So let me walk you through where a spreadsheet starts to break, usually right when your business is growing and you can least afford it. Number one, there is no reconciliation. Reconciliation just means matching your books against your actual bank and credit card statements, dollars for dollar. It's how you prove your numbers are real. In Excel, nobody is doing that for you. Money goes uncounted. Transactions get entered twice, and you do not find out until tax time. Or worse, until an IRS letter shows up. Number two, human error. One wrong sale, one formula that did not copy down, one expense logged in the wrong month. In a spreadsheet, one small mistake silently flows into every total after it. You won't see it, but your tax return will. Number three, no audit trail. A proper system tracks who changed what and when. A spreadsheet, you can overwrite a number, save it, and the old version is just gone. If the IRS ever asks you to prove a figure, trust me, I typed it right is not a defense. Number four, it doesn't scale and it doesn't show you the truth in real time. The moment you add employees, multiple accounts, or a few hundred transactions a month, that spreadsheet becomes a part-time job. And because it's always behind, you never actually know right now, today, whether your business is profitable. You are flying blind. And flying blind is fine until it is tax season, which brings me to the part that actually hits your wallet. This is the part I really need you to hear, because this is where messy books stop being annoying and start being expensive. First, the burden of proof is on you. Here's something most business owners do not realize. When you claim a deduction, you have to be able to prove it. The IRS calls this the burden of proof, and it sits on your shoulders, not theirs. If you cannot substantiate an expense, you do not get to deduct it. So picture this. You spent the money, it was real, legit business expense, but your records are a mess. The receipt is long gone, and the spreadsheet just says $400 supplies. In an audit, the deduction can be thrown out, and now you owe tax on money you genuinely spent on your business. Second, messy books make you a bigger target. When your records are incomplete or disorganized, your audit risk goes up. Because if the IRS cannot verify your income and expenses, they dig deeper. Clean books answer questions before they are asked. Messy books invite them. Third, and this is the big one, the penalty. If the IRS finds that you underpaid your taxes because of negligence, they hit you with what's called an accuracy-related penalty. It's 20% of the amount you underpaid, on top of the tax you already owe, plus interest. And here's the part that should make every spreadsheet user sit up. Under the IRS's own rules, negligence specifically includes the failure to keep adequate books and records. Read that again. Not keeping proper books isn't just risky, it's part of the literal definition of negligence the penalty is built on. Fourth, you cannot plan what you cannot see. Good tax strategy happens during the year, while there is still time to act, not in April when it's too late. But you cannot make smart, proactive tax moves if your numbers are 3 months behind in the spreadsheet. Disorganized books do not just cost you at filing time. They cost you every single planning opportunity you missed along the way. So if you are watching this and you haven't really started bookkeeping yet, I am not here to scare you. I am here to tell you the truth so you can do something about it today. Because here's what I've seen over and over. The cost of waiting is always higher than the cost of starting. Every month you put it off is another month of transactions to untangle later. Another stack of receipts that goes cold. Another deduction that slips away. Catching up on a year of neglected books is painful and expensive. Keeping clean books from today forward, that's simple. It's a system and it pays you back. It's a system and it pays you back in deductions you actually get to keep, in penalties you never have to pay, and in nights you actually sleep. You don't have to have it all figured out. You just have to start. Right now is the best time you will ever have. So can you use Excel instead of bookkeeping? Sure, you can, but can isn't the question. The question is whether you can afford the missed deductions, the audit risk, and a 20% penalty riding on top of your tax bill. For most business owners, the honest answer is no. If you are ready to stop guessing and start keeping books that actually protect you and grow your business, that's exactly what I help business owners do.